So, in your investing or in your life, have you ever gotten to a place where you find yourself working 50, 60, 80 hours plus a week, and you realize that maybe the promise of working hard or investing hasn't actually given you the lifestyle that you want? Well, my friend today, Justin Donald, actually wrote the book called The Lifestyle Investor. I've heard some of the content. It's absolutely phenomenal. I know you're going to love this interview. So, welcome, Justin. How are you today?
I'm good. Great to be here, Bronson. Thanks for having me.
Oh, it's so good to have you. We connected through our friend Mark Moss, and he's just an amazing guy and just talks a lot about economic stuff. And he brought you in to share at his group called the Inside Line, which is kind of a mastermind. And I just, you kind of talk through the points from your book, and I was just really touched. You had some stuff I really hadn't quite heard before in the way that you explained it. And so I wanted you to really break down, lifestyle investing. Why don't you give us a little bit of your story and why is lifestyle investing important?
Sure. Well, I'd love to just, I guess, say the whole genesis of this really stems from building this great life where I'm spending time with the people that I love most and the people that I want to have the most influence and impact on, which is my wife and my daughter. And then from there, my closer family and closest friends. And so this whole idea of being a lifestyle investor, I coined this term because to me, it has to do with freedom. It's owning your time. Most people don't own their time.
Mm.
They trade time for money. And a lot of people, maybe they start out as an employee for a company. Maybe they eventually start their own company, but at a certain point, even entrepreneurs will recognize that, hey, maybe they can make more by working harder or by building something bigger. But that thing that they build really enslaves most entrepreneurs. And so you build this thing that is supposed to give you autonomy and freedom and lifestyle, but it gives you a warped perception of it for most, where maybe you are making more money so you can afford a nicer lifestyle. And so you have some of the things that you want, but you don't have the time. And the time is the most important component of it all. So that's really where it was for me when I spent time living as an entrepreneur. There were moments where I was just putting in crazy, 16, 18, 20-hour days and having that, over the course of weeks. And that I just knew was unsustainable. And so what I wanted to do is I wanted to buy assets that produced income. So that way I could buy my time back. I don't have to trade time for money. I can have capital or assets producing, income that I can live on. And so most people are a slave to something. They're a slave to their job, their boss, their business, the income they make, the lifestyle they're accustomed to, the safety and security of the things that they know, or a role that they know, or, just thinking that they have some sort of job security, which has always been a comical term and outlook, in my opinion. Even the banking industry calls, salaried employees like, they call them safe or with job security, but someone could be let go at any point in time, even though that's safer. So that always cracks me up. But at the end of the day, I wanted to own my time. I wanted to spend it as I saw fit. I wanted to be able to help empower other people to do that. And what I found is that my gifts really shine when I have the time to use them, and that my passions can be discovered. And by the way, I knew some of my passions, but I hadn't taken the time to discover some of my other ones because I was too busy being reactive. I was reacting to the world versus carving out the time to be proactive.
I love that you shared that because I think a lot of people don't realize that time is the most valuable thing. My background, I worked with a lot of physicians. I was a consultant in the medical field. I was well paid. A lot of physicians were well paid, but a lot of physicians, they're working 60, 80 plus hours a week. And some are making over $1 million a year. But you talked about, you make more money, a lot of times then the living standards go up and all of a sudden you become a slave. And so whether somebody's working a minimum wage job or they're making $1 million a year, you can become a slave to money. And so I love what you're talking about. It's this idea of allowing money to work for you or having your money work for you rather than you working for money. And once you're able to build up passive income, once you're able to get your time back, it allows you to do things. I mean, sure, there's times you go sit on the beach with Mai Tais and you do all this, but it allows you to really seek greater purpose. So I see it being a very spiritual journey. We're able to go and really figure out, what am I here to do? What are the things I really care about? Who are the people I care about? And having time to be able to do that, because most people work way too much. They don't take any time off. Americans take 13 days off a year, which is the lowest in the entire world. And it's like we just live to work. So your book kind of really just brought that to light a lot. For me at least. But why don't can you get in a little bit? I thought this was really interesting from what you shared. You used a couple terms here that I thought were really good. You talked about invisible deals in emerging markets and companies you didn't know that needed your money. Can you talk about kind of how you came to those, and kind of like, because everybody's going to where do these deals, whatever, but like you found some really creative ways to get money to businesses that needed it, and you did very well. Can you share maybe a couple of the stories and kind of what that looked like?
Yeah, you bet. You bet. And I think that one other thing I want to say on what we were talking about before is that when money's taken care of and you're not making decisions about money, you make better decisions. Or maybe I should say, I make much more intelligent decisions. I've found that my clients, my people in my network, that they do the same. In fact, right before this, I literally just ran an event for my mastermind, and I had a guest come on that pretty much works with the top 0.1% of income earners in the US. And he said that it is very common that no matter how much money someone makes, that all of those dollars get consumed for most of them on lifestyle. And so that was an interesting thing to think, well, maybe you're making more, but the lifestyle is going to catch up unless you're intentional, purposeful. So, just food for thought. But getting back to, the questions that you asked. So when I talk about an invisible deal, so this is the third commandment in my book, The Lifestyle Investor. And really it's the 10 commandments of cash flow investing for passive income and financial freedom. It's my 10 criteria for why I invest the way I invest, why I teach people, a certain methodology. This has really played out for me in a very powerful way. And so the third criteria, or the third commandment, is invisible deals, finding them. Where are they? Well, they're all over. Most people just don't look, or they don't know what to look for. And the idea of finding deals that are not on the market, I mean, you can find great deals that are on the market, but your likelihood of finding an even better deal off the market is greater because you're cutting out the competition. If you're the only one bidding on a deal, it will likely sell for less. It will likely sell quicker. You're likely to be able to negotiate the terms you want because there are not additional parties that are competing in any way, shape, or form. You could look at this with real estate, with people that have, pocket listings. I love buying real estate that way. You could look at it with private enterprise, private equity, and buying companies or buying equity in companies that it's not listed. And so here's the way that I look at it is I want as much access to deals that when I invest, I'm already in the money. I'm buying it at such a good rate. I'm investing at such at such great terms that I've made money today already. And then everything else is icing on the cake. And so what I look for, so obviously things that are, off market, people that have companies that maybe want to sell, but they don't know that they want to sell. They just need to understand the value of them selling. So for example, one of the investments that I recently did was in a company that wasn't even looking to raise money. But what I did is I leveraged my network. I leveraged relationships that I thought they would find useful. I leveraged what I call smart money, which is not just getting money from a bank, but finding money that has strategic interests that align with you, right? And so this deal was an incredible deal because they didn't need my money, but they wanted my partnership. So that was really big. And by the way, I've done this many times, but recently I did. And we worked out some great terms, and that, it's a win-win on both sides.
Real quick, I want to stop you there for one sec because it's
Yeah.
interesting. It reminds me a little bit, and people can relate with this with like Shark Tank, right? Somebody will partner with Mark Cuban and sell 50% of their company because it's Mark Cuban is on board, right? They may never talk to Mark Cuban ever again, but the fact that he's aligned and there's a strategic interest. So I love what you're talking about there, but can you talk about like what led up to that? Because, right, again, some of it when it comes to deal flow is were these like cold calling, or did you have your team like, reach out to businesses, or like maybe you can give an example of like how that started, right? Because everybody's like, how do I, invisible deals invisible. So how do you make it like they don't even see it, right? So how did you create value for them when you approach them, and how did you approach them?
Yeah. And by the way, some of this is like branding, name recognition. So like I've invested in a bunch of deals that Mark Cuban's done. And so hearing his name gives me confidence because he's probably done some vetting. But you got to be careful that you don't just assume, because to him, $1 million is nothing compared to someone that doesn't have $1 million, right? So you got to be really careful, like what they're investing, that may just be pennies to them. But at the same time, I like to know that people are in alignment. And so I do think that it's important. Like, who is the owner? Have they had success before? Who are the other investors? All that matters. But finding the deal, most of mine are just through relationships. It's just through suggestions. I mean, some of the deals that I've done, I haven't even asked to invest. I've just met people and I've said, hey, have you ever thought about doing this with your company? Or have you ever connected with this person? I bet you there'd be a lot in common. Or, hey, I know someone that could actually help you scale this arm of your business. And so sometimes it just comes from adding value. I'm getting nothing out of it, but I just care to share. When a lot of people think my superpower is investing. I actually think my superpower is connecting business relationships. It's connecting the dots and helping one business owner know another business owner that they should know each other because they could do a lot together. The relational networking side of things.
I want to say real quick, there is so much power in what you just said, because it's when you're a connector and you bring value to people in that way, and you just show up and are saying, hey, I want to help. And it's really interesting, Justin, because what you're saying is like, I would think traditionally passive investing is like, it's just passive. You wait, the deals come to you, or somebody tells you about whatever, but you're just basically saying like, how do I create value in this person's business? How do I create value in their life? Who can I connect with them with? And then this opportunity just shows up, which I think is really phenomenal. And I know you have some examples of maybe can you share? I know I keep saying share, but can you maybe share one example of like, I know you shared, I can think of several that you had, but maybe you just talk about one of them of as you were doing this, creating value, this opened up and it became this, 5X, 10X kind of thing for you.
Yeah, some I'm probably not allowed to speak about.
Right, yeah, and I want to be sensitive. Yeah, totally.
And so I do try and speak in code and speak vaguely where I can get most of the points across. But there is one deal in particular with a company called Tradeful that I'm a big fan of. I think they're doing some really cool stuff in specialized fulfillment, e-com, just what I think is going to be, everyone knows that this is the next wave, but I just think they're doing things that no one else is doing. And I had heard that they were raising $10 million of bank debt. And I was like, that's interesting. Why just take money from a bank when you can have strategic investors? You can have people that you could have a group or a handful of investors that invest that same 10 million. But now you have people that want to see you succeed, and they've got connections and they've got relationships, and maybe they even want to run their own business through you. So anyway, I talked to them about, hey, what would it look like instead of going to the bank? And they already had an LOI, like they were ready to close with the bank, the bank, and they had done some work with this bank before. And I said, well, what if I could bring you $10 million? My mastermind easily does that in deals. And the strength of that, we could have similar terms. But maybe inside of those terms, you give us something, nice, like an equity kicker, a free piece of equity. Maybe we charge a lower interest rate than what the bank was. So, kind of a win-win there. And then our network is going to give you the network effect where you bring people on, they connect you to other people. And so they felt like, yeah, this is a great idea. So we ended up moving forward. We invested $10 million into them. This has been so successful. They have since opened up another round of $10 million because they signed an agreement with, I'm actually not sure if I'm supposed to say. So one of the largest retailers, online retailers in the world. Let's put it that way. Puts Amazon to shame. And so it's just an incredible opportunity, but it came from, them making the right decisions, having the cash to do certain things, going after partnerships, but then also having people in our network that A, came onto their platform, B, recommended them to other people, C, connected the dots to other big names. And so, I don't want to take anything away from them or their team, because they had, already some inroads to a lot of this. But I think that our network really helped them move the needle and acquire more companies, acquire more brands, and just leverage relationships a little bit more. So that's been a really promising opportunity. And for our group, we set up a debt structure so we get all of our money back after 3 years, 13% interest, monthly payments. We're in a senior secured position. We're collateralized. There's all these things where we're super protected. And then once all of our, even right now we've got, free equity or warrants in the company. And once we have all our money back, it's all house money.
Yeah, no, it's really incredible. And this is why anybody listening who is, I mean, a lot of people that are just very wealthy and they're not really doing much stuff, or they don't know what to do. But this is the power of networking. This is when you're in the room with people that you start, and also you're trying to add value. You're just trying to figure out how to help people. But a lot of deals come to me just through people that I know, or other people that are investors, and we bounce things off. What do you think about this? What do you think about that? And then there's stuff that's really special. Like, this is a very special circumstance that you were in the right place, that you really made an opportunity out of. This was going to happen with the bank, but you basically came in and said, hey, well, what if I could do that? And had you done something specifically like that before? Was that kind of like a new thing for you to do in that way, for Justin Donald to be involved with that?
Well, this is a different deal than what we had done. We've done all kinds of different deals. It's a different industry. It's the terms are a little different from other things, but I like getting free equity. That's always my goal. And then in addition to that, it's in what I think is a market that's just going to take off. Like, it's not even emerging anymore. So when I talk about invisible deals, part of what I want to look for is like, where's the future? Where are the next 10 years? Where are the next 20 years? Like, what's going to be in style, in demand? What's going to be the disruptive technology or the transformative technology that everyone uses? So what is standard quote today, but what is it really going to be tomorrow? And so e-commerce, there's no ifs, ands, or buts about that. Specialized fulfillment, one-stop shop for many different solutions. This is the wave of the future. And whether this company does it or not, I think they will. Let's say they don't. This is still the wave of the future. Some company is going to do this, all the different solutions that they have across the board, integrations with Shopify, the list goes on and on. So for me, I want to figure out, like, what are the trends? I like getting in early on trends or on what I think is going to happen. So, early on in single family homes, before it was an asset class, before it was actually talked about as, more than just like a one-off home rental, but like the groups, the big portfolios. It was only 15 years ago, maybe 14 or 15 years ago, where it officially became a real estate asset class. Before that, it wasn't.
Right.
And so, getting in on that early was huge. Getting in on cannabis investing and CBD and hemp early on was huge for me. E-commerce, there's a ton of e-commerce and a ton of other technology that I've done where I was able to get in early. Cryptocurrency, Bitcoin, like, there's so many things that if you catch it at the beginning, it can be so lucrative.
Yeah, no, I call these, they're like macro trends, right? We're really razor focused. We buy large multifamily only in primarily right now Jacksonville, Florida, and Atlanta, Georgia. And it's because of the amount of people moving there, because the business friendly. It's like, I know in 5, 10 years, there's going to be a lot more people in these markets, and they're moving for a really good reason. So it's the idea that the rising tides raises all the ships. So if you're just in the right area, you invest in the right thing. And I know a lot of people that do that, where they really look at the macro first. Well, what's actually growing? So I used to buy single family houses in Cleveland, and Cleveland, there's lots of, it's high cash flow, but it's not the population is stable or declining. And so that's something to consider, is what's the growth look like for this particular thing. I wanted to shift gears for just a minute. It kind of ties in with what we're talking about, but in light of, rates rising, I mean, at the time of recording this, a 30-year mortgage is 4.9%. 3 months ago, it was 2.9%. So the 75% increase in interest rates. Inflation is, they say 8%. It's probably more like 10 to 20%. What are some opportunities or areas of interest that you're looking at right now that you're like, I really think these certain assets or ideas are going to do really well?
Well, no matter what, the value of the dollar is decreasing.
Right.
So just plain and simple, if you are not putting money into something, you're losing purchasing power. Anytime that the Fed prints money or artificially manufactures it on a ledger, on a balance sheet, like this is your dollar becoming worth less. And so anyone who's saving money, anyone who is, anyone who's utilizing banks and just letting money sit there, like that's the worst, return or thing that you can do, unless the purpose is that you're waiting for this killer deal and you want to have some cash. But if you never deploy it, then it just loses. So, what's best? I don't know what's best. I can tell you that broad stroke, buy assets because assets will increase, and buy assets that will kind of increase in tandem with money being printed. I don't know if we're out of the weeds yet with money being printed. We likely are going to have more money printed. So if you're owning real estate or businesses that have a downside protection, like they're not likely to go to zero. Stock that can go to zero. There are a lot of stocks that go to zero. Cryptocurrencies, there are tons of them that go to zero. Okay. Real estate businesses in certain markets or with certain financials or, backstopped by certain government contracts. There are certain assets that are just much safer to invest in. And as more money gets printed, the value of those assets increases in tandem. So that would be my recommendation. So what does that look like? Well, I think that for me personally, I don't invest a whole lot in companies that don't have profit. That doesn't mean that I don't do it. It's just a much smaller percentage of my net worth that I do that with. And it happens to be just from cash flow. So I don't like to do risky bets until I build up the cash flow. And then I let that cash flow, the surplus above what it costs me to live my lifestyle and the amount that's coming in, that's what gets invested into risky stuff. So what I invest, most of the time I'm looking at, in real estate, I still love mobile home parks. I love industrial distribution centers. I love self-storage for the right deals in the right markets. I love, apartment complexes, multifamily, but a lot of those are just really overvalued. And the numbers that I see, I just wonder how people make them work. But you could still buy them. You could still buy them cheap and buy them direct and not go through a broker and find maybe a mom and pop owner. That's your best scenario. What's the cap rate you're coming in at? Absolutely. And are you getting a 3-point spread? Or, I guess for some people, they want to do a 2-point spread. I really like a 3-point spread because then you're making 20% cash on cash return on everything. So that's in the world of real estate. I like, on the side of business, can I buy stable companies that have a track record, that have strong financial backing, that have collateral to your investment, that if something goes wrong, you end up in a better situation. There's a lot of opportunities. The bottom line is you want to own assets. If inflation is going up, which it's going to just keep doing, and the more money that gets printed, the more it's going to go up. That's a direct correlation. Then you need to buy assets. And I like assets that produce income, because if it produces income, then you're never in a situation where you have to sell it. So if the market implodes, you can just hold out until it restores because you got the cash flow to cover that asset.
Yeah. It's assets that pay you to hold them, right? So it's things
That's
that
right.
actually cash flow. So you go from cash to asset to cash flow, which is awesome because then you get an inflation hedge typically built in with assets. Justin, I know that you're also a disciple of Warren Buffett. I love Warren Buffett stuff, read, books and all kinds of stuff on him. And he talks about rule number one, right? Rule number one is don't lose money. Rule number two of investing is don't forget about rule number one. So if somebody's getting into this, they're new to passive investing, what's a tip or a couple tips that you'd recommend, just kind of flags to watch out for as people are getting started?
Well, it's mind blowing to me how many people invest with no concern, no thought, no due diligence on the risks. So when I was a new investor, I used to invest in things thinking that everything was going to go to plan. And then I really hoped that that was the case. But I learned that hope is not enough sometimes.
It's not a good investing strategy to hope that it's going to go well.
It's not. And so what I now do when I invest is I say, okay, this deal is going to fall apart. How is it going to fall apart? How can I protect against it falling apart? If it falls apart, how can I make sure I stay whole? And then I solve for why it's not going to fall apart or what I can do to mitigate those risks. So it's a different mindset. So anytime someone says, oh yeah, you're going to have a 18% IRR, in my mind, I'm like, yeah, right. I mean, I hope that's the case, but I'm like, yeah right. So I think most people get caught up in this, like, oh yeah, 18%. Let me start cashing the checks of what I've already made. Let me invest this money, but you haven't made it yet. And keep in mind, if you're investing with people that haven't been doing this for over a decade, you've only invested with people that have made money. They've never experienced turbulence. They don't know necessarily how to weather a storm. I like to see 15, 20, 25, 30 years of experience because I want to know that they went through the 2008 financial crisis. I want to know how they performed, because just because it's been great the last technically 13 years doesn't mean that next year is going to be great. And so I want to think not only is the deal not going to work out, but the economy is going to get bad. And it's not that I want this to happen. It's not that I think that this is going to happen that fast. At some point in time, it's going to. That's just the nature of history and cycles. So I'm not a doom and gloom, but I am certainly a guy that says, if this happens, how does my investment perform before I actually make the investment?
Right. No, I think looking at the downside is the number one thing, right? That whole rule number one thing from Buffett is just, if whatever you do in your investing, if you don't lose money, and there's so many ways to lose money. Anybody ever says there's a guarantee or that it's what you should just run because, and then I think what you talked about is the idea of experience. Like, what is the business plan and what's the experience of the person working this? And if they can't answer questions or they don't have any, hey, here's what went wrong or here's what I do different, it's time to turn tail and run. So I like that a lot. Well, hey, I wanted to say, Justin, this is just phenomenal. I wish we could probably talk for hours on this stuff. You and I have a similar heart. We're really trying to help people to become financially free so they can live out their purpose and really let their lifestyle become what they want it to be. So I just want to say thank you for what you do, for your book. It really is phenomenal. You have some really unique ways of explaining things. I really recommend that everybody watching go ahead and pick up his book called The Lifestyle Investor. You'll definitely learn a lot from it. And I know you also said you have your mastermind group as well, so people can connect with you that way. What are some ways people can connect with you?
Yeah. So the first thing I'll say is, if you want, for anyone in your network, your audience, if you go to lifestyleinvestorbook.com, that's where you can get a free copy. You just pay for the shipping. So that's one thing that anyone can do. You can still get it on Amazon or whatever. And just know that all the proceeds of my book go to an organization called Love Justice International. They stop human trafficking in 24 countries around the world. They're just incredible. And so I just want I want the education from the book to create financial freedom, but I want the money from the book, the capital, to create actual human life freedom. So no matter where you buy it, you're helping a great cause. For anyone that wants kind of the next steps beyond that, or just some things in tandem, if you go to justindonald.com, that's my main website. My podcast is there. I've got a blog. I've got an online course, 2 different master classes, and a mastermind. And you can dig into any of those. The mastermind is application only, and most people don't qualify. So I just want to throw that disclaimer out there. But those that don't generally find a lot of value and information in the master classes and all the other products. So I've got free stuff, I've got cheap stuff, I've got, more expensive things depending on where someone wants to be. Or, I just think it's important that people are investing in A, their own personal education, and B, in their network and peer group, their coaching, their mentoring, their circle of influence.
Yeah, that's great. Well, I appreciate that. We'll put those links in the show notes there. So lifestyleinvestorbook.com and justindonald.com. Well, awesome, man. Well, really appreciate it. I actually also am very passionate about ending human trafficking in the world. So I'm on the board of an organization called Dressember that raises money for human trafficking. And I just love that you're involved in that cause. So awesome. Well, again, thanks again so much for coming on. This has been great. Look forward to checking out more of your stuff myself. And I know our audience will get a lot of value out of it as well. So thanks so much, Justin.
Thanks, Bronson. This is so great. And I'm so glad to know that you're cheering on and supporting and, helping with such an important and not very well known tragedy in the US. So thanks for all you're doing there. And thanks for having me on the show.
Thanks, Justin. So some really interesting takeaways I got from this conversation is just the idea of the invisible deal, right? Like the deal that is somebody's not necessarily out there looking for money, but it just shows if you're willing to add value. If you come into a situation and you see somebody with an issue or a problem or something they're doing, if you can find a way to help it happen. This actually happened to me the other day. I was doing a yoga class. I do hot yoga sometimes. Some of you would rather die than do hot yoga, but I do hot yoga after my running because it helps me loosen up. And I was talking with the instructor as she was walking out, and I say, "Hey, are you one of the owners here?" And she started saying, "No, but I want to start my own studio." And so I said, "Oh, well, that's what we do. We raise money. We do stuff. Let's have a conversation." So we're meeting up this week talking about what it would look like for her to start a yoga studio. Now, I may or may not invest in that. I may or may not bring investors to that. But it will just be great to see. Maybe there's somebody that I know that would be helpful to her. And then when you start giving value to people, I don't know who she knows. Maybe she would refer me to somebody else who would say, "Hey, I really want to work with you in this way," or "I want to invest in your deals," or things like that. So we just don't know what sort of issues people have, what sort of value we can add. But if we can be somebody who's a connector, and this is something as a passive investor that's really important as well, because Justin really didn't get into this on here, but he really is pretty passive. He does not operate any of his deals, but he'll come in and he'll find a creative way to structure it financially and bring the investors and all that. And so there's ways as a passive investor, as a wealthy person, the more savvy and the more you learn, the question is not really, I can't do this. It's how can I do this? How can I be someone who adds value to this person, to their problem, to help solve things? Because if you do that, if you can find a way to add value, people almost feel compelled that they have to do something in return to bring value. So anyway, hope you got value out of this. I hope just my encouragement for you today is just to go find one person, even if it's just at your coffee place that your barista, something, just go add some value of encouragement or try to understand what someone's going through and just try to help them, whether it's business related or not. And it's amazing if you just approach life and you approach the world this way, it really gets to be that there's so much out there. There's so much abundance. There's so much, not just financially, but also just with joy and love, and all of these things are out there. So anyway, this is my motivational talk for the day, but it also works in business. But we'll look forward to catching you on the next episode.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.